Hey guys, welcome back to the channel. Today we're talking about Sofi stock and why it is going to $100. I passionately believe this company has the potential to reach $100 very quickly. It has been absolutely battered right now, but institutions are buying it up. Everybody is buying it up at a really cheap entry price, and you can make a massive 10 times return on your investment if it gets to this point, and it is not unrealistic. Banks in the sector have huge market caps. I know Sofi has only been around for 5, 6, 7 years or so, but it has got the potential to massively compete and take customers away from the established banks. It is a disruptor, and it is really getting its foothold in the market now, and it is pulling people on board left, right and centre. If that sounds like something you're interested in today, guys, please smash that like button, consider subscribing to the channel, and I'll catch you in there and we'll take a look. Hey guys, it's been an absolutely huge week for Sofi. The Super Bowl was held at their stadium. We've got this lovely barcode here that's advertising across the website. They've launched an advertising campaign as well. So the company is spreading like wildfire, taking companies from the established banks. And just by having a quick dabble on their website, you can have a look at the app here. You can see some of the most recent things here. They've got a credit rating now. They've got 1k towards setting up with a personal loan as an offer, 1% interest on cash savings, and you can earn up to £2,800 to break up with bad banking. And that is their biggest offer at the moment, and the offer that they're taking seriously advertising out over in the United States. Here you can see all of the offers that they and the products that they offer, and they have over 3 million members that love Sofi. If you have a quick look through their most recent advertising video here, you can just see just the amount of offers that are available. It is absolutely excellent. This company is phenomenal, and the reason its share price is so badly battered right now absolutely confounds me. I really don't know why it is so low. I'm happy that it's so low. I'm happy to take on extra shares. So are a lot of institutions, which I will get to and show you in a minute. Loads of people are buying up all these shares at ridiculously low prices because everybody knows where this company is going over the long term. It handles extremely well. The app is absolutely fantastic. You can pull all of your finances into one place. And this, obviously, younger people love digital banks, and that's where we're going. The population is getting younger and younger in terms of who's going to get into banking as the legacy banks and legacy customers drop off the other end. So banks are going to have to work really hard to retain their customers. Looking at the share price is still sitting at $12.18, up slightly pre-market, but has sort of rocketed up and down, so you'd have to be prepared for some volatility with this one over the short term, but over the long term it is 100% going to go up in value. From a market cap of just 9 billion compared to the massive generation of revenue that this company has and the absolutely excellent membership growth that it has got going forward, the bank charter has now settled, so they are officially a bank. That allows them to leverage Galileo more on that in a moment. That, I believe, is one of Sofi's secret weapons that people don't really understand just how well that company could do as well. So the one thing that I wanted to talk about is that over the River Park Large Growth Fund cites Sofi as having a $2 trillion investment opportunity in its total addressable market, taking market share, as I've already mentioned, from the likes of Wells Fargo, Bank of America, JP Morgan Chase, etc. And they are doing so. That is the thing. If we look back over just how well this company has done in terms of its growth over the last few years, they are taking these customers, guys. There is no doubt about it. If we have a look at the institutional ownership, it is absolutely flying, especially since the Super Bowl. Just look at all these big green buys over the last few days or so. Absolutely huge purchases of shares going through. And if you notice, not many sales of red at all. In fact, I'm yet to see any over the last few days or so. Big buying up shares, big institutions and trusts buying up and adding to their positions. And why not? I've been adding to my position as well. And then just to show you the trend of this one, So as the share price has come down in the first half of 2022, institutional ownership has actually obviously gone upwards, which is obviously a good sign. These companies are going to be patient. They're going to sit there and wait for their money to grow. So as already mentioned, Sofi currently only has a market cap of 9.7 billion. That's it, guys. 9.7 billion for a bank growing as fast as this is. And when comparing it to its peers and who it's going to ultimately try and take market share and customers from, you have Bank of America, $372 billion market cap. JP Morgan, $445 billion market cap. And then Wells Fargo, $218 billion market cap. That's just to show you where the established companies are at. And so far, it's just trading at a tiny, tiny fraction of that. But just how quickly the digital revolution is going on, they're going to pull customers from these banks and sign up all the new millennials and younger, because naturally millennials prefer digital banking. Everybody prefers being on their phones when they're that age. I understand that these are established companies, the likes of Wells Fargo, JP Morgan and Bank of America. They're established, they've been around for decades and decades, so therefore their caps are going to be high, and their revenue at the moment is significantly higher than Sofi's. But Sofi's is growing so much quicker and will deliver a fantastic return. And just popping on to Seeking Alpha, you can see that they do still call it speculative at the moment, but they still refer to the $2 trillion total addressable market, the really good growth in numbers that are using the app. There's so much information to read here, guys, but you can really see that there are a lot of people jumping on board with this company. Everybody is waking up to it, and everybody's hoovering up the shares at such low prices. As we've said, this is a disruptor of legacy banks, and it is growing at a rapid rate. You only have to pop on to their investing presentation just to see just how well they are doing. Membership growth just keeps skyrocketing. Use of products keeps skyrocketing, triple digits most recently. And all you have to do is just look at the slides and just see just what the operating segments are. Now, this is the most obvious that we know about. Lending is still there as well, but not many people know much about Galileo, and we're going to cover that in a minute. We're going to have a quick look on their website as well as to what they do. Now that Sofi is a bank, they can leverage that even more to help Galileo's growth as well. So we will wait for the revenue report on the 1st of March just to see how well Sofi has done over the Super Bowl quarter and how they've done in advertising their company and the new advertising campaign has done. I think it will have done absolute wonders for the share price growth, the product growth and customer growth, and that will ultimately reflect in the share price as well. So Noto began thinking that Galileo had the potential to become the AWS of fintech, and that reason is still being made. It's absolutely phenomenal. So we'll have a quick look at Galileo now. So what they actually do is challenger banking, consumer payments, the gig economy, investing, lending, and commercial payments. A little bit the same as what Sofi offers, but they offer it in a fantastic amount of way, and they power the likes of Monzo, Wise, Euler, Moneylion and Dave, and they offer the solutions such as digital banking, card issuing, payments processing, API technology, and just the background work that makes Sofi tick, makes those other companies tick. Essentially everything that happens in the background, which is why people don't know about it quite so much. But without Galileo, there would be a lot of banking, a lot of digital apps out there that would struggle to do what they're trying to achieve, which is really, really good that Sofi owns this. So they've got their, not only is Galileo helping them out in terms of their growth, but they've got their claws into a lot of other financial companies as well. And lastly, we're going to have another quick look at why there's so many short sellers in the stock at the moment and why they should be worried going into earnings. So the short position in this company is sitting up at 20%, and I'm struggling to realise 16.9%. I'm struggling to work out why that actually is. All the catalysts out there for the company present in the opposite direction. The only thing that is a negative for this company is that it's fintech, and the rest of fintech have been hammered at the moment, and the fact that it was once upon a time a SPAC, and SPACs have fell out of favour with investors at the moment. But the rest of the trends for this company and just how well it has been doing in terms of growth and all the other catalysts pull in the other direction. So I'm expecting to see, especially if earnings come out and they on the 1st of March and they absolutely smash it, I'm expecting these short sellers and these bears to get burned big time, because I really do think that the share price could spike up quite massively, similar to what happened to Upstart the other day. They smashed their earnings, they smashed their EPS, they beat on their revenue, and I think Sofi is going to do the same, and it will really squeeze the bears out, and I wouldn't be surprised to see the share price fly upwards. That will be a great return on investors for the short term, but I, as a declaration, am holding this long. I'm talking years here, so I really want to see this company spike up and get up to $50 a share, $100 a share, and really start getting towards the likes of Wells Fargo and Bank of America. That is going to take years, but I'm prepared to wait the years to make the money that I intend to make on this company. I really like exactly what it's doing. I really like the way that it's going about it. It makes smart acquisitions. It is just a brilliant fintech company to be in right now. And there we go, guys. Those are the reasons why I believe Sofi is significantly undervalued and is well on its way to $100 a share. It isn't going to happen overnight, but I believe over the coming quarters and the coming years, this share price will absolutely build its way up to $100. I have no doubt about it. In my mind, it's one of my biggest positions. I absolutely love this company and what it does, as I've already said. So this is one of my longest positions, one of my biggest positions, and I intend on holding it for years and years and years to realise that opportunity that I can see. The only way it wouldn't get there as quickly as I think is if they decide to issue more shares to raise capital for another acquisition. But the way this company has done its acquisitions over the past, they have all been extremely valuable, so that would ultimately help the company out. So I wouldn't also be too bothered about that, and then the share price can grow even longer over the longer term. Thank you very much for watching today, guys. Absolute pleasure to bring you this information as always. Do smash that like button on your way out. That'd be absolutely awesome if you are going long on Sofi and you think it can reach $100. Catch you in another episode.